Okay, the markets rallied today, but it was not big tech that led the way higher. In fact, there was headlines that actually put some pressure on technology on a relative basis in the semiconductor industry. It was small cap stocks. It was interest rate sensitive areas. Those areas of the market just continue to explode. One of the biggest 3-day gains in the Russell 2000 that we've had over the last year or so. Big explosion in breadth. This is the type of move that we like to see on the bounce. I'm going to show you what I'm talking about with our charts with today in today's market outlook preview. So let's go ahead and get started. Today is Tuesday, November 25th, 2025. This is the market outlook from marketscholars.com. My name is David Settle. All right, before we get going too far, I invite you to click this link right here. Our Black Friday sale is live now. If you click that link, you will get access to our premium tier for 40% off the normal price. So normally it's $129 a month. You actually can sign up for the elite tier. You get 25% off of that monthly value with the elite tier. But with the Black Friday code, you get the elite tier at 20% off, which means you get now a 40% discount to the regular monthly premium rate for the next 3 years. That locks you in. So if there's ever any price increases, doesn't impact you. It locks you in for the next 3 years. Again, that's our Black Friday sale. You can also see at the top of our website, if you click that link, join today, it will also take you to the same page. If you click this link, it will take you to our basic subscription page. Here you can get access to our there we go. Our free website, our free blog post, Market Outlook blog posts. So this is what they look like. This was yesterday's blog post here, or Friday's blog post. You get access to the full blog post every single day for free. With that, you can see, just fill out the form here, and that will sign you up for that. On Friday, so this is a Friday video, you actually get access to the full 30-minute version of the Market Outlook video every Friday. It's free for you, again, for all of our basic subscribers. And of course, if you click this link here, that will take you to today's blog post. This is what it will look like when you get there. So, if you just come down to the bottom, click login here if you're already a subscriber. If not, click the join free button, and then it will take you here, and you can subscribe and be able to look at today's blog post tonight, right away. All right, now let's take a look at what happened here today. So we did get a significant move today especially in the upside in the S&P 500, but especially the Russell 2000. The Russell 2000 took off like a rocket ship. Second straight day of 2% gains. In fact, if you look at the daily price moves here, you'll see that it's pretty much 3 straight days of right around 2%. And if I were to change this to a 3-day option, it's one of your better 3-day performances that we had all year. Like, it's been, back over here in April, we had a 3-day return of 6%. This was 7%. You have to go back quite a bit, pretty much to coming off of the November 24 lows, where we were up about, what would that be, 8% higher. So it's still a pretty good move. It's been a while. It's been over a year since we've had that kind of move over a day. And we significantly outperformed large cap stocks. If you take a look at the ratio of the Qs relative to IWM, big drop here towards the 200-day. We weren't very far above it, but you can see the last 3 days we dropped significantly below all these moving averages. Started the day below the 200-day moving average. And you can see the PPO is falling, the long-term PPO is falling. Now keep in mind, this is normally a positively correlated ratio with the S&P 500. So that it might not be a good thing if we keep dropping. But it was a very good thing so far for this current rally, as coming off an intermediate low point with everything rising is a very positive development. One of the sectors that's typically associated, these has been pretty correlated with the Russell 2000, has been the home builders. The home builders really benefited from the drop in yields. You can see the 10-year yield dropping back all the way down to 4%. So that had an impact on home builders. They also broke above the 50 and the 30-day moving average. In fact, like the Russell 2000, getting that bear tag, which can either be a signal that we're moving lower or the start of a new trend. You pretty much got the same kind of trend. It's already green. That's why you didn't technically get a bear tag. But crossing the market sentiment line and the intermediate line, everything's looking really, really good. And part of the reason for this this move today, like one of the really strong benefits of the move is the surge in breadth. So you can see the number of stocks above the 50-day moving average jumping significantly higher, well above 200, above 250. So back above the 50% mark, well above the moving average. If you take a look at the number of new highs, we jumped back above 100, back above its average. Looking at the advanced decline line, it jumped up. In fact, if you look at the 3-day average of the advanced decline line, it's up to 1,300. That's a very good sign for the markets. You can see the last time when we come off of intermediate lows, we talked about this a couple weeks ago when we got this bounce. You want good breadth, and we've had this is significantly good breadth for a bounce off an intermediate low, suggesting the higher probability that we can really get a good intermediate run going and a good green tag. Right, we got the new red tag, and now we're 3.5%, so we're probably about a third of the way towards a new green tag of 10%. I mean, we're only at 1.5% from a new green tag, but the next green tag we expect to at least be 10%, if not higher, and we're already a third of the way there. So really good jump in the breadth. As I mentioned, part of the reason for the decline is the drop in yields. As you can see, yields dropping to 4%. How much more downside that has to do, that's going to be the key story, right? Is because it's one thing for the 10-year yield to drop. What we don't want to see is the 2-year yield dropping more, because that means that the Fed is cutting rates not just in December but indefinitely, and that will make this yield spread rise to levels that we don't want it to get to, because when it rises up towards 150, 200 basis points, because a 2-year yield is falling too, and a lot more than a 10-year, then it drops. But if the 10-year drops down to 3.5% to where the 2-year yield is, and the 2-year yield doesn't drop, right? It just kind of stays at this 3.5% level because that's pricing in the next cut, and the 3-month is not quite pricing in the next cut yet, but the 2-year yield has set in the path. So if the 10-year yield drops to that and the yield spread flattens out, then that's bullish, right? So it's okay for 10-year yield to drop as long as the 2-year yield doesn't drop too and drop more than this. And really that 3.5% mark is the base level that we want it to drop to. Finally, the big news, one of the big news today was in the technology sector, in particular in NVIDIA, right? NVIDIA dropped pretty sharply on competition news, essentially, out of Google, Meta using Google chips, Google using their own chips. So, I mean, it's an intermediate decline. It technically still is an intermediate decline. In fact, if you look at the whole sector, it was only up 0.25%. And that's, again, when we're looking at rotation, which is a big deal for us, we want the rotation to be into the technology sector, and that's still not rotating into that area. In fact, if I were to change this to show everything moving against technology, we still have everything up to the right, right? Everything is moving up here in the leading category versus technology, and when we're bullish, we want everything to be in the red, right? In the red there, with technology leading the way higher. And that just hasn't been the case during the pullback, and so far hasn't been the case during this 3-day rally. And that does it for our Market Outlook preview today. All right, so if you want a full version of a Market Outlook video every day and not just on Fridays, click this link. That will give you access to our Market Outlook Foundation tier. For just $29 a month, you get all of our Market Outlooks every single day, including the trades that we do at the end of each video. You also get access to our Market Outlook Live. This is a live stream we do on our website at 3:30 Eastern Time. We put on today's Market Outlook trade before the market closes and before I even produce the Market Outlook video. We also manage all the old trades to see whether we should stay in or get out of them and talk about that and why. And then you also get access to our Market Outlook Live Trade Tracker, where we track the results of those trades throughout the year. So again, I've said this before, but through the expiration cycle of November, from the beginning of the year to the November expiration, we were up $9,700 total across all our Market Outlook trades. Again, we only put $500 at risk on our directional trades, $1,000 at risk on our non-directional trades. So obviously you can tell that would more than pay for your Black Friday deal, right? For the next 3 years, just having 11 months of Market Outlook videos. So the $29 a month is well worth the cost and with the value that you're getting there. Thank you very much for watching. Have a great rest of your Tuesday night. Follow me on Twitter at DavidSettle42 for more content between the videos. Subscribe to the YouTube channel with this icon or the subscribe button down below. Click the thumbs up icon to like the video. Comment down there on anything that stood out to you today. Have a great rest of your Tuesday night, and we'll see you all tomorrow.